Welcome to Trader TV, your insight into institutional trading. I'm Jo Gallagher. Swaps trading has become an increasingly crucial part of managing risks in fixed income strategies over the past 2 decades. Here to discuss the growth and electronification of swaps are Angus McDiarmid and Robert Marchetti at Tradeweb.
Thanks for having us.
Thanks for having us.
Angus, starting with you, what drove the electronification of swaps trading in 2008 and how has that impacted the trading process ever since?
Tradeweb was actually ahead of the curve. Electronifying an OTC product that was traditionally negotiated on phone or chat by leveraging our experience and expertise in the cash markets seemed like a natural step. People said it couldn't be done and we were crazy, but we executed our first swap in 2005. That was well ahead of the financial crisis in 2008, which actually drove the path towards a more regulated marketplace. The introduction of Dodd-Frank in 2010 and the mandates to trade certain products on a registered venue or a SEF in 2014. The benefits were already there to be seen because of our early adoption. Taking a high risk, high stakes execution of a swap product and putting it in a safe, regulated, cost-efficient environment such as on Tradeweb meant that our clients and dealers could focus on innovating around the pinch points.
And Rob, turning to you, how has electronification of swaps actually driven growth in the market over the years?
Yeah, so the growth has been phenomenal. Angus touched upon the regulatory change that definitely helped. What's been super interesting on Tradeweb is the mandated swaps makes up about 30 or 40% of our volume. So the lion's share is our clients voluntarily electing to trade electronically. Now, they've seen the benefits around speed of execution, cost reduction, the transparency, the access to markets. And as the language has become standardized with FPML and FIX, it means there can be more customizable products that can be traded in this manner. That access to the market means our clients have come to us and said, look, we really want to expand that footprint. And as more and more currencies have become cleared, we've had to look into the frontier markets and the emerging markets to deliver for our clients.
So Angus, what has changed on Tradeweb over the last 2 decades?
So innovation brings challenges and brings change. But when we executed that first swap 20 years ago, the people that were involved in that from a Tradeweb perspective are still at Tradeweb. And the people at the buy side and sell side firms are still in the market today. And that means that we're fortunate enough to have a great depth of knowledge and also a broad, deep relationship with our client base. Those clients and dealers constantly want to challenge the status quo. And we have over 400 technologists at Tradeweb whose job it is to transform those ideas into a reality. So we started as an RFQ platform, and our clients came to us with the challenge to electronify the same protocols that they use in the voice world. So that brought us towards an RFM protocol, where a client can ask for a two-way price from a market maker. And that's particularly relevant to the hedge fund and asset manager community that trade on our platform. It can be seen as very beneficial in less liquid markets, such as EM, and also in the DM world, where you're trying to trade larger size than perhaps screen size and limit your footprint in the marketplace. Another part of our evolution, I suppose, involves our compression tool. That was built as a way of booking offsetting risk at CCPs to net down positions. But that has evolved and transformed over time into a tool for clients to execute risk, whether it's outright, to transfer risk between CCPs or indexes, or even to connect markets, where they can trade a package of swaps, bonds, and inflation products contingently.
It's the universal dilemma, everyone trying to do more with less. And if we focus on the buy side, the real money execution desks are now much more multi-asset. So they're having to look across a range of products. If we think about the hedge fund community and the fast money community, they have very much a global presence also, and they have a round-the-clock model where they're interacting with a number of markets. So both those worlds scream they're looking for efficiency. And that's where we've seen that demand around electronic trading. And that demand has also really snowballed into our clients thinking around automation. Can we save more time, speed of execution? Our clients are all on an automated journey. They're all just at varying degrees of that journey. But it's definitely a topic that we discuss with our client base, how we can help them automate.
Excellent. And then tell us a little bit more about how you've seen traders' needs change as well.
Our traders want to integrate, whether that's the real money who need to integrate into an order management system, or whether that's the hedge fund community who may be more tactical. They may have a holistic order management system, or they may work more on a pod level. So we really have to become agnostic as to how our client wants to send orders pre and post trades. We definitely have had to look into Excel, Python, EMSs, OMSs, and really work with the client base to enhance what they're trying to achieve from the electronic trading process.
And Angus, how exciting is the next frontier of electronic swaps trading?
Well, all of our best ideas come from our clients. What starts as a simple solution to solve a hurdle will often morph into having extra layers of functionality added over time to evolve a trading process. I'm particularly excited about the opportunity in the bilateral space. Traditionally, the market has focused on electronifying the cleared space with the understanding and belief that most derivatives would move that way, and that's certainly been the case so far. But now we're increasingly being asked to look at the bilateral products, those that won't ever clear, such as swaptions or cross-currency, and also IRS for some of our clients. That brings a whole host of new problems and new challenges, and I think that's where we can really leverage our existing knowledge and understanding of electronic trading, not just in the execution piece, but in pre- and post-trade workflows also.
We're very engaged with our clients, and there's 3 topics that come up. It's data, liquidity, and automation. They're not separate topics. They all bleed into each other. As an example, we have a huge data sample given the activity that we see on TradeWeb. And our clients want to understand, how could we enhance liquidity? Should we be looking at dealer selection as one example? And when you're in a world with customizable products where there may not be a streaming level, you may be trading forward starting, you may not have as much information pre-trade, how can we overlay our data to help you with that liquidity piece? Automation is so contingent on data as well. How are our clients thinking about what sizes should I be trading? Should I be looking at thresholds? Should I be consuming pricing in order to give myself a certain target level? And by building this with our client base, to Angus's point, it gives us that opportunity to ensure that we're developing the right workflows for our clients.
I would like to thank Angus and Rob for their insights, and of course you for watching. To catch our other shows, including Trader TV this week every Monday at 6:45 UK time, go to tradertv.net.